Morning, everyone. This is Leslie Jouflas, and I'd like to thank StockCharts.com for inviting me back for another segment of Your Daily 5. And today we are going to be talking about the S&P 500 that has just broken to new all-time highs after sort of a lengthy try for those highs. And we're going to look at some charts, both daily and in some intraday breakout patterns that you might be able to use. And then we're also going to take a look back, because I am seeing some longer term things happening. So we're going to take back and see if we can see some similarities to the 1999 to 2001 top. So let's get right to the charts. So here's a daily chart of the S&P 500 Emini Daily. So this is the futures chart. And we're looking back on the left side where the X is here. That's where our February highs were this last year, just before the big decline happened and the low in March. And up here, you're going to notice some kind of green horizontal lines, and these are just some support areas and areas in the market that the market was trying to get through as resistance. If you notice here where the red arrow is, the market spent several days, like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading days, just hovering below the highs from February 2020. The NASDAQ, as we know, made new all-time highs quite a while ago. The S&P had been lagging that, and the Dow Jones Industrial lagging even further. Many times when you see this type of consolidation very close to a very important high such as this, the market is just stalling there before it makes another attempt up. It did have opportunities to break to the downside, but every time it started to come down, it found support again, and then just went into these sort of doji closes. So this is an important thing to notice as a technical analyst on the charts. We broke out to the new high. You can see the bar here, and we want to be watching now for tests of confirmation or non-confirmation. So this area of this consolidation here is going to be important if the price does come back down below yesterday's low and back into this range. It'll be very important to watch how the price behaves. I've drawn in just a couple of short-term trend lines here to watch, and then this one down here. But right now, the important numbers are testing the big round 3,400 and the 3396.5, which was the previous all-time high. Now let's take a look at some intraday charts that you might be able to learn some trading patterns from. So as I mentioned on that chart, the price was just hovering below where this upper green line is. That was the previous all-time high. And we can see scaling down to, this is a 5-minute chart, all the way down to a very short-term time frame. We can see some little ABCD buy patterns forming before it got up to the high area. And these had been on the short-term time frames in the last few days forming on a pretty consistent basis. And a lot of times these can sort of point you in the right direction, so to speak. And then you can see the price on the short-term time frame just hovering right below the all-time highs. And it just was not getting what we call price rejection. It was holding there just fine. And then it came up, and you can see a test of the previous high, and then it starts to move to the upside and starts to form little continuation patterns of AB equals CD buy patterns, and trending move, little bit of consolidation, AB, CD, buy pattern. So these are really nice little continuation patterns that you can learn. Feel free to come to my website and you'll find information there, or feel free to email me as well. Okay, now we're going to move on now And a couple of things I want to point out about these new highs that I think is interesting. This is a chart of the VIX, volatility index, and this index is inverse to the S&P 500. So when the S&P 500 moves up, the VIX moves to the downside and vice versa. Back in February, I've got a yellow circle here where the markets were moving to those new highs in February, but the VIX was not moving to new lows and had started to rise. So that was a divergence that was very interesting. And as we know, the markets had a very steep decline. Well, I'm noticing that the VIX is also back, into, you can see where these high numbers were on the VIX. The VIX is back into this area. This was taken yesterday, and the VIX again was not coming down to new lows. So again, I just want to stress the importance of looking for signs of confirmation or non-confirmation. And the price is going to tell us if it's going to be confirming these new highs or not, I'm sure in the very near future. But I just want to bring your attention to this, and this is something that I'm going to be continuing to watch. Okay, now let's get to a couple of longer term charts that I want to point out. So we've had the new highs here. This is a pattern that I've been following for some time, and these types of patterns do take a long time to form. This appears to me to be a broadening top pattern forming in the SPX. This is the cash market, and you can see I've got some trend lines drawn in here, and market certainly has more room to the upside. These are the lows from February. So I'm going to be watching this trend line up here. If you notice on the first chart that I showed, there was an extension. Let me go back very quickly here, see if I can find that so I can show it to you. One more chart is what I need. There we go. Up here, this 127 extension where I'm taking the length of this swing, multiplying it by a Fibonacci ratio of 1.27 and projecting it up. This is going to be close to the upper part of the trend line area. I don't know if price is going to get here, but I do have this sort of marked in, coinciding with that upper trend line of that broadening top pattern. Another thing that I've been watching is, I was curious when I noticed on this monthly chart, this is the NASDAQ Composite Index now, when I noticed just a couple of days ago, this very, very steep ascent that has occurred on this monthly chart. And I thought, oh, I wonder when the last time this type of steepness has occurred. So I just sort of kept going back in time. I've marked in a few other of the slopes and angles, and this is, a very kind of orderly ascent to the upside, even from these 2019 up to 2020, more of an orderly, and we can see that all the way back. But when we get all the way back to where the top formed in 1999 and 2000, the decline into 2001, we can see the same slope and angle from that period. And so you can see here from late 1998 into 99, where we had the steep ascent, and there was a consolidation with that, and then the final ascent to the upside. So I think that it's possible that we may be getting into a very speculative type of markets. They tend to go to the parabolic side, and then as you can see, they can also have very steep corrections to them. So there are some things that are just very curious about this ascent that we've seen. Another one is we can see on the MACD here that back in the 2000 time frame, very extremes on the MACD, and we haven't seen that again since right here. And then the volume also is extremely high on these moves. So I'm going to be watching carefully these larger patterns that are forming, and also the price behavior around the support and resistance areas. So that's it for today's Daily 5, and thank you for joining me. And again, please feel free to visit me on my website.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.